Today we'll be going over adjusting journal entries specifically for accrual accounting. First, I wanted to go through a summary of adjusting entries. Specifically for accrual. As we know in accrual accounting, it means that we earn revenue or incur the expense now, however we receive or pay cash later. In our initial entry to record an accrual, we would debit accounts receivable and credit sales revenue, or if it is an expense, we would debit that expense and credit salary payable or expense payable. However, for deferral, it is a little bit different because we have already received the cash in the past and we are going to recognize that revenue or expense later. Specifically for accruals, some examples would be a sale on account. This would include the accounts receivable and revenue. We earn revenue now, but we won't receive cash until later when the receivable is paid off by the customer. At the time of the earning, we would debit accounts receivable, credit revenue, and at the time of payment, which would be our adjusting entry, we would debit cash and credit accounts receivable. The same goes for a salary expense. Salary expense and salaries payable are the two accounts that would be used. We incur the expense now, but we will not lose cash until the company actually pays its employees. In this instance, our first journal entry would be a debit to salary expense, a credit to salaries payable. On the date of our adjusting entry, whenever we pay our employees, we would debit salary payable and credit cash. In this example, Bell Code agrees to provide services for Pat and F in exchange for Pat and F's promise to pay on August 31st. The services are valued at $500. The journal entry on July 1st to record the sales revenue would be a debit to accounts receivable of $500. This says we are going to receive the cash in the future. And then a credit to sales revenue of $500, which states we already performed the service, we have earned our revenue. The adjusting journal entry, which would be on August 31st when cash is received, would be a debit to cash of $500 to increase that account and a credit to accounts receivable of $500 because we are no longer expecting to receive that cash. I hope you found this video really helpful. The concepts and information presented in these videos will be true no matter what accounting class you are taking. However, the concepts presented in this video are referencing material currently covered in Baylor University's coursework. Remember, if you are a currently enrolled Baylor student, we offer free tutoring services. Our tutoring center is located on the first floor of the Sid Richardson building. You will find all the details you need to know about these services on our website, www.baylor.edu/tutoring. You may schedule a free 30-minute one-on-one tutoring session online, or just drop in during any of our open business hours. For more information about our current services, please visit our website. Thank you.